Will the Ripple SEC case ever end? And a Harvard study points out XRP and XLM for cross-border payments. We're going to find out.
I ain't gonna give in now. I just gotta live this now. I'm gonna be man, I'ma kill this stuff real quick. I'ma go take it to town, cause I gotta be that king in their ring when I'm knocking them out when I'm back with the real. Cause I am just up on the journey. You just know that I'm just going insane.
Warriors, rise. Grand rising. Good evening, warriors all over the world. I'm going to start out with an attitude of gratitude from my family to yours. I love you and appreciate you for all the support. What I'm about to share with you is not financial advice. I'm not a financial advisor. I'm just documenting my journey into the quantum financial system and helping my family build generational wealth from a shift from industrial to technical, one of the biggest changes in our financial history. Just want to remind you guys, we are 6 days away from the launch of Xroyalty, our first project on XRPL. We're going to revolutionize how companies move in to the metaverse, how they communicate, and how they come together as a community. So if you click down below, you can see the website, the light paper, everything you need to mint on January 11, 2023 with Xroyalty. Also, our private coaching program. We have over 300 applications, only 20 spots, 60 interviews within the next 10 days. So we probably will be closing the application process here very soon. That'll be down below as well. So let's dive right into it. Okay, so XRP XLM were named in a Harvard study, which I'm going to show you at the end of this video. Very, very powerful. So you have to ask yourself, why is this happening? But I've been taking you through the game. My brain works in a logical circuit. That's how my brain works. I look forward, I look backwards. When something happens, I pull myself into the logical brain and I say, well, why is this happening? So when Ripple, Jay Clayton, put a case against Ripple around XRP being a security on December 20th, 2020, many of you who watched that video, I said, I'm holding on like a tick on a dog. Something's not right here. Well, as we went through this whole process, we went into 2021 bull run. 2022, everything comes collapsing down by design because first they resist it, then they sue it, then they regulate it, then they join it. The phase that I believe we're heading into, not financial advice, is we're heading into the regulation phase. So first they made you think cryptocurrency was fraud. JP Morgan, all these banks told you it was a fraud. You're a criminal if you buy it. At the same time, they were setting up blockchain technology and their own cryptocurrency structure. At the same time, Brian Brooks allowed federally chartered thrifts, which I'm going to show you in just a moment, and banks to custody your crypto. So we're first going to start with Brad Garlinghouse's tweet on, I think it was yesterday, January 3rd, 2023, talking about, the first day of the 118th Congress. And he's just putting a message out to them saying, hey, we're way behind, guys. America is way behind. Number one, our debt to income ratio is at 124% GDP to debt. We're borrowing for our spending bills, right? Our taxes are just going to pay the interest. We're in a debt-based society. We're absolutely screwed. And you're suing one of the biggest changes or companies that can change the financial system, which I'm going to show you at the end in the Harvard study. Okay. So I just wanted to bring this tweet to your attention, and I want to show you what other countries are doing and what our banks are already allowed to do. It's not that they can't do it. They're allowed to do it. So the question you have to ask yourself is, why are they telling you crypto's a fraud? Why was Bank of America and all these accounts, all these companies shutting down your debit card and saying, if you're doing crypto transactions? Because they knew it was a modern day bank run. And I'll tell you what, crypto is here to stay. I showed you the World Economic Forum video yesterday where they said, hey, don't listen to what the banks say, watch what they do. So Brad Garlinghouse tweeted, today is the first day of the 118th Congress. While prior efforts at regulatory clarity for crypto in the US have stalled, I'm cautiously optimistic for 2023. Is the year we finally see a breakthrough and thread on way. I believe we will. I believe there'll be a settlement between Ripple and SEC, or however that's going to work out. I believe it will be a settlement. And then we'll get regulation. They'll use this case on how to regulate cryptocurrency in the market. Ripple will continue on, and Ripple will become a dominant force. It'll end up like an Apple, Amazon, or Google. Just my opinion. Okay, just my opinion. So you can go through this whole tweet, but he's basically saying 2023 is the year. So to me, this is a signal that 2023 year is the year for regulation. Well, let's look at facts, figures, numbers, logic. Okay, let's use our logical brain. Indian government launches crypto awareness campaign. The government of India is launching a crypto awareness campaign that will educate investors about the legality of cryptocurrencies in the country while highlighting the risk of investing in crypto assets. It's not by chance they're all launched at the exact same time. I'm going to show you what America launched a couple days ago. Okay. Morocco's central bank says crypto regulating draft law is ready. Crypto update. U.S. regulators warn banks about crypto risk. January 4th. These are all coming out the exact same time. Why? Why are they all coming out the exact same time? Why do they say the same things across all these countries about stable coins? And then all of a sudden, we have a stable coin that collapses. And all of a sudden, they're all talking about stable coin regulation. Then Celsius collapses. And then all of a sudden, FTX collapses. And then everybody's bringing out the regulation documents, sharing with you, yeah, cryptocurrency is here to stay. The World Economic Forum tells you it's here to stay. But we're going to tell you how to be safe in cryptocurrency now. We resisted it, but now we're going to tell you how to be safe. And the public forgets all the FUD. The public forgets that they told them not to get into it. And the public will come and buy cryptocurrency when the price goes up, which is the worst time you can buy it. This is the greatest time right now. Wealth is built in bear markets, not bull markets. Okay? Intelligent investors invest in bear markets. They sell profits in bull markets. When everybody's excited, they pull profits. When everybody's in fear, they buy. It's that simple, okay? So let's dive into this. So you see all the stuff happening. Brad saying, hey, 2023, I'm cautiously optimistic. I am too. I think the case is going to settle. And then all of a sudden, at the exact same time, going into 2023, everything's like, hey, crypto's here to stay now. But we're going to tell you how to be safe and how we're going to regulate it. So this right here from Forbes, the U.S. regulators warns banks about crypto. So let's look into the documents. So I don't just read the news. I go into the actual documents. So this is the Board of Governors for Federal Reserve Systems, Federal Deposit Insurance Corporation, the FDIC, and the OCC. Okay. So it's the Federal Reserve, the FDIC, and the OCC, the Operation of Currency Control. So the Board of Governors for the Federal Reserve, the Federal Deposit Insurance, the FDIC, and the OCC are issuing the following statements on crypto assets, risk to banking organizations. So it goes through all the risk. Of course, they have to tell them the risk, right? But at the same time, they're saying, hey, guys, get set up because the monetary system is switching. Here's the risk. Here's how we want you to manage it. What we're doing right now is we're going to figure out a new Howey test. We're going to tell you how we regulate it so we don't lose control of the system. So everybody doesn't go decentralized. So everybody doesn't do a modern day bank run. So by the time you figure out the cryptocurrency is really here to stay and you start buying Bitcoin at 100,000 again, and you start buying, Ethereum at 10,000 again, and you start buying Ripple at $10, whatever it is, you're going to come rushing in because all your friends and family are. Okay. So they're going to tell the banks there. So this is what the part I want you to see right here. Okay. So they're saying risky, 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 risky. But here's the part I want to read with you guys. Banking organizations are neither, and comment if I'm reading this correctly. Okay. I read this over and over again. Banking organizations are neither prohibited, so neither not prohibited, so you can do it, nor discouraged. Let's read that one more time. Comment down below if I'm reading this correctly. Banking organizations are neither prohibited, so that would be you're not prohibited to drive down this road, so I can drive down that road, right? Nor am I discouraged, so nobody's stopping me from driving down this road. If I'm reading that correctly, please help me with this. From providing banking services to customers of any specific class or type as permitted by law or regulation. Okay, key. As permitted by law or regulation. We're going to dive into that in just a moment. The agencies are continuing to assess whether or how current and proposed crypto asset related activities by banking organizations can be conducted in a manner that adequately address safety and soundness, consumer protection, legal permissionability, and compliance with applicable laws and regulations, including anti-money law and illicit finance statutes and rules. Based on the agency's current understanding and expertise to date, the agencies believe that issuing or holding as principal crypto assets that are issued, stored, or transferred on an open and or decentralized network or similar system is highly likely to be inconsistent with the safe and sound banking practices. So this is the key right here. So decentralized or similar network, okay, stored or transferred or issued. So here's what I'm hearing by being an ex-banker, going through CBA Executive Banking School. It's saying, hey, listen, guys, we don't want you to. So basically like Coinbase, all these exchanges that are decentralized, right? They want those shut down. They want everything centralized within the banking system. So they want to hold your cryptocurrency, okay? So they can be within the scope. So they can have the rules and regulations. Your crypto will be custodied at Wells Fargo, okay? They'll hold, they'll be your custody basically. And then that's a new banking system. Then you'll have your FedNow services where they'll have a pass-through account or a central bank master account, which is already set up and they need to set them up. So you hear what I'm saying? So not prohibiting them from doing or discouraging them from doing it. They just want it centralized inside of the banks. Okay. So here's how we know this part. Where is it? There was a part we talked about. What is the rules, right? So back on July 22nd, 2020, this is what, so Brian Brooks left the head legal counsel of Coinbase to become the head of the OCC, the Operation of Currency Control. Okay. He was there for a short time, guys. He left Coinbase to become the head of the OCC. And this is a document that he put out while being the head of the OCC, or what his team put out. It says federally chartered banks and thrifts may, are not prohibited. Okay. They may provide custody services for crypto assets. This is back in 2020, fam. Okay, national and state banks and thrifts have long provided safekeeping of custody services, including both physical objects and electronic assets. The OCC has specifically recognized the importance of digital assets and the authority for banks to provide safekeeping such as assets as 1998. The letter is published today. The OCC concludes that providing crypto custody services, including holding unique cryptographic keys associated with cryptocurrency, is a modern form of traditional bank activities related to custody services. Crypto custody services may extend beyond passively holding keys. Your banks are going to be crypto banks now. Okay, Wells Fargo, Bank of America, US Bank are all going to be crypto banks. Coinbase will also be a bank. That's why Coinbase can accept your direct deposit now. Go look. You can put your direct deposit into Coinbase, therefore making them like a regular bank. Coinbase is, I don't believe they're going anywhere. I think they're part of the banking cartel. So you're seeing what's happening with FTX. The distraction was, oh, these exchanges have no governance. They were doing their actual bookkeeping on QuickBooks. They had no CFO. They had the richest people in the world investing. All of them had their hands in this. You saw the Jay Clayton interview that I showed you guys where he's like, we're not talking about that. He didn't say that, but he said, correct. And he was just like, shut that down, right? You guys see the game, the logic view, the 30,000 view. Okay. So then in 2000, where are we at here date wise? 2021, OCC clarifies bank authority to engage in certain crypto activities and the authority of the OCC to charter national trust banks. Today's letter reaffirms the primacy of safe and soundness. Providing this clarity will help ensure that these cryptocurrency distributed ledger technologies, keep that in your memory bank, and stablecoin activities will conduct by national banks, federal savings and loan in a safe, sound manner. The OCC, the acting OCC, Asu, said, because of many of these technologies and products prevent novel risk, banks must be able to demonstrate that they have appropriate risk management systems and controls in place to conduct them safely. This will provide assurance that the crypto assets activities take place inside the federally regulated perimeter are being conducted responsibly. Okay, I learned a lot about governance yesterday with an amazing conversation. So they want governance over this. They want to control this. They don't like the decentralization. But remember, the masses are going to come in when the bank says it's safe. They trust the banks, okay? They trust Wells Fargo. They trust Bank of America. They trust all these organizations because they've been around forever. People don't understand what decentralization is, but they don't understand what decentralization. My mom doesn't understand decentralization. My dad would rather go to a bank, right? It's a trusted institution with insurance and regulations and all that stuff. So we didn't create the game. We're living in it. Okay. So decentralization, regulation is not bad. It's a good thing. FTX is a great example of lack of regulation. But the very people who are making the regulation, we're meeting with them, so we can go down that rabbit hole. This is floating around in the news right now. I think I can't remember which news station put this out here or which media outlet put this out there. My apologies. So I went and found the study. When I read an article, I go find the actual study so we can take a look at it. This came out on, just for your own, I think it was in 2022 May. Don't quote me on that. So this is Harvard FinTech online short course. Pretty cool. This is Dr. Jahesha Mehta, MBA. So this is Harvard study. So it talks about the possible first step by the feds. They have the Fed Now services coming out in 2023. I'm just going to show you this right here. It shows you the fundamental difference between fiat and digital transactions. It shows you like private key A, private key A. It just shows you like, it shows you you're going from the physical ID to private keys, right? Very private, decentralized, no third party. Cross-border transactions, shortcoming, proposed solution, goes through all this here. And then it goes into why digital dollar currency. And it talks about 2 blockchains-based protocols, Ripple, XRP, and Stellar, XLM, are gaining popularity as the coins of choice for many international businesses. Of course, the SEC threw out the case against Ripple, not by chance. It's to bring in a new Howey test, in my opinion. Okay, then it goes down here a little bit more where it dives into, I know we all want to hear about this. So basics of XLM and XRP blockchains, Stellar, tentative native cryptocurrency, Stellar Lumens, and it are interesting concepts. In the simplest terms, XLM is a global currency, like currency without borders, that can be redeemed in any fiat currency of your choice, less that be dollars, British pounds, Bitcoin, or Indian rupees. Rupees, if I said that correctly. In fact, according to Stellar, it has no owner. If anything, it's owned by the public. Okay, then you have Ripple protocol, which is able to process secure, reliable transactions in a matter of seconds that the length of time requires for a round of consensus to complete. These transactions are provably secure up to the predetermined bounds. Ripple white paper, they have the Ripple white paper, and so they're cheap, fast, and so this is the Harvard study right here that everybody's it's kind of floating around the news right now. So just wanted to share with you guys the information that I dive into on a daily basis, why I don't get flooded out in cryptocurrency, why I'm an intelligent investor, and why I say the word intelligent investor, the book Intelligent Investor. I'm long-term. That's how you get wealthy, guys. You hold long-term. You don't worry about bull markets. That is what gym bros do. That's what the people at the barbershop do. That's what people at the nail salon do. That's what your girlfriend's having one. Oh, did you hear about this crypto? It's going to explode. You're going to get rich off Dogecoin. Those are not intelligent investors. I'm sorry, not being rude, but those are not intelligent investors. That's how I changed my acumen. I used to be in the pump and dump. I got wrecked one time with not leverage trading, yield farming. I was like, whoa, wait a minute. And that's when I started to read how billionaires and multimillionaires operate. They buy intrinsic value cryptos or companies, right? Or they invest in companies. And so I started doing the same thing. I started bringing on things into my business portfolio and have equity in companies that are diversified across certain sectors. My cryptocurrency is diversified across certain sectors. I'm holding some long-term forever. There's some that I'm setting up, like I'm stacking Ethereum right now because I believe it's going to be part of the banking system. And I believe we're going to be able to do a lot of asset-backed loans, even within a current bank. It's going to be like my piggy bank that I'm going to use. I have my leveraged life insurance, right? So I follow these time-tested strategies that work. And so I got out of the indoctrinated mindset and I stopped taking advice from people who weren't wise counsel, who were listening to the media and the news and watching an article and not diving into things like this and looking at the actual documents, the facts, figures, numbers, logic. So I love you guys. I appreciate you guys. Do me a favor. Send this to one person who maybe is struggling to understand that cryptocurrency is a fraud or not a fraud. I'm not saying to invest in crypto, but I'm sharing with you, this is the greatest time in human history. We're going to go into one of the biggest recessions we've ever experienced in our life. I highly recommend you get your worldly debt paid off. I'd highly recommend you get into cash and wait for these assets to pull back. And once you deploy those assets, make sure you diversify cryptocurrency, land, all these different things out there. So not financial advice, just sharing exactly what I'm doing out there. Everything's you need, description down below. We launched January 11, 2023. If you want to be part of history with our X royalty, and then the private coaching program, I'm going to keep it down there, but I believe we're going to pull the plug on regards to any more interviews because that first program is going to sell out, and we'll be taking deposits for the next 120 days for private coaching with me and my team. Love you guys. I appreciate you. And if you want to just get into the 120-day challenge, much lower cost, obviously, and it's self-paced. 3twarrioracademy.com. Warriors. Get your shit together. Let's go.